Hey everybody, what is up? Welcome back to Final Trade. I'm very excited today to bring you another 6-month update of the long-term Magic Collector box performance. Now, the way I always do this is I assume you had to buy this box on release date, the most disadvantageous date to do so because it would have tied up your money for the maximum possible amount of time. I assume you're able to buy at wholesale. And now this is a complicated assumption because for a lot of 2021, 22, and even most of 23, we were able to buy a lot of these products at or below wholesale price from struggling card stores, even well into the life of the product. And by the time about halfway through 23 and most of 24, that those opportunities have just been reduced. So there's no clean way to adjust that assumption. There's no way that will satisfy everyone. I'm just going to stick with it, and you can do your own mental adjustments that you like based on how you feel about that. So I've gone out today and I've looked at the market price of all these boxes on TCG Player. And again, this is actually conservative because we've been in a bull market. And so the current low ask price for products on TCG Player is often a bit above the market price because the market price is a trailing average of something like the last 30 completed sales of the product. And so these market price numbers are below what it would actually cost you to go and buy that product on TCG Player today. And then from those data, I compute the compound annual growth rate. Now, the thing that we all love in finance and economics about compound annual growth rate is it levels the playing field. What it says is if I started with an asset at a certain price on one date and it ended up at a different price on another date, what is the compound annual growth rate of it? What is the single percentage number that it either increased or decreased by in price every year along the way from that starting date to the ending date? And so when I talk about other things on this channel, and I'll often mention that the S&P 500 index averages about 8 or 10 or 12% return per year. That's apples to apples with compound annual growth rate. That 8 or 12 or 10% for the S&P 500 depending on the assumptions you make. That is the same exact kind of calculation that I'm doing here. And so that's useful when you're talking about finance and investing to be able to compare different potential investments along an apples to apples mathematical method. And that's what compound annual growth rate gives us. That's why we like it so much. And so what we can see is first off, we still have 6 expansions here whose collector boxes, they're the ones highlighted in red on this column. 6 that still have negative return. And what that means from a CAGR perspective is that the value of these boxes in the market today on TCG Player is lower than the original wholesale price. So if they're highlighted green, it just means that the market price today is higher than the original wholesale price of these products. Now, when we looked at this last time, which was exactly 6 months ago, there were 10 products that had overall negative lifetime performance, and the 4 that have since gone positive are these 4 highlighted in blue over here on the names column. So Kaldheim switched from negative lifetime performance to positive. So did Dominaria United, Unfinity, and Dominaria Remastered. Now, a couple other things to talk about. When we look at the chart over here where I've just plotted the CAGR returns, the bars for Lord of the Rings Special Edition and the bar for Fallout, I had to clip those. I had to limit the vertical scale of this chart to 100%, even though the Lord of the Rings box is returning a mind-boggling 316% compound annual growth rate. And don't worry, I'll talk about that a little bit more in a minute. It's not quite as crazy as it sounds. It is crazy, but not quite as crazy. And Fallout is returning 413%. And so I had to clip those so that the rest of the bars would be visible and comparable to each other, so you could actually see the difference in them. Now, there's a lot of things to talk about here. The first is what I already mentioned, that 4 of the 10 expansions that were negative last time have rolled to positive. That means, like I always say, printed to oblivion does not last forever, and in some cases, it's simply the market was wrong or the market was a little too dramatic. On the short timeline, markets are voting machines, and on the long timeline, they're weighing machines. And so markets can be emotionally wrong, but they can't keep that up forever. Over the long timeline, more and more people realize the reality of situations. And what I'm specifically talking about with that is, of course, Dominaria Remastered. I think that expansion was always amazing. The boxes were always amazing, but I think people went a little crazy, a little hard on the print run numbers and the availability in the market, and basically it overshot to the downside. Now, I'm excited that it did that because in 2023 and early 24, I bought a lot of boxes of this in the 140s, 150s, 160s, and hey, they've nearly doubled from there in a year and a half. So I'm happy for it to have done it, but the market has since realized, hey, this was actually a really good product. It's come up a lot. It's switched from overall lifetime negative performance to positive performance since I last looked at this 6 months ago, and I think it has a very bright future. Now, Unfinity, Dominaria United, and Kaldheim, those were negative because they were printed to oblivion, because they just didn't have enough chase value in them. But, printed to oblivion doesn't last forever, and these are scarce collectibles that people enjoy destroying by opening them. And we expect that eventually even these really, really unloved ones, AFR, Midnight Hunt, Crimson Vow, those will eventually roll positive. The other really interesting thing here is that of these 6 that are still negative, they're highlighted red on this column, they're all single-digit negative. So the market, even for these worst ones, has recovered a lot. And the absolute worst is only minus 7% compound annual growth rate. Now, if you had bought them at wholesale price on release date and you're still holding them today, you feel pretty bad about that. Because, yeah, there are a lot of alternative investments that you could have gotten much better returns on since then. You feel pretty bad. But, most of us bought these in the 130s, 140s, 150s kind of range. So we don't feel as bad because today with a market price of 140, we're not doing as bad. So moving on, another thing that you can see in this plot, and I will go right here to this green bar. There it is. Dominaria Remastered, compound annual growth rate of 3%. That was the first collector box released in 2023, and a few weeks after that, of course, we got Phyrexia, which now has a compound annual growth rate of 37%. And beyond there is this kind of modern age of collector boxes that I always talk about. It's when WotC realized, hey, we've got to reinsert value into these. We have to put more consistent chase value into these boxes, and we have to control the print runs. And you can see how much better the returns of these sets have been since then, since the beginning of 2023. And this is why I keep begging everybody, stop being negative over collector boxes. Stop being negative over standard collector boxes. WotC is kicking ass on collector boxes for 2 straight years now. Look, the worst one, Murders of Karlov Manor, a compound annual growth rate of minus 1%. That is the worst performer in the last 2 years. And you see, if you just look from, again, Dominaria Remastered to the right, compared to the left, how much better all the performance of these has been in the last 2 years. If you are still negative on pre-ordering standard collector boxes, any collector boxes at all at this point, this is what you are betting against. This is the recent history of proven changes of WotC riding the ship on collector boxes that you are betting against. If you're saying that, I just think Aetherdrift's not going to be that great. I just don't think it's going to do it. You're betting against this performance of the last 2 years. And here it is, the irrefutable, objective, mathematical proof of what WotC changed, of how much they altered course, and fixed what they were doing with collector boxes and how it has paid off in the market. That we only have one that is negative in that time period, and then we have Outlaws, which is a sad plus 2%. And all the rest are really doing great. I mean, the next worst one is Commander Masters at 17% compound annual growth rate. And again, I always go back to S&P 500 index. It's because that's what most people should have most of their wealth invested in your retirement accounts, in your post-tax brokerage accounts. And yet that returns 8 to 10 to 12%, and Commander Masters is 17%. You know, what we're seeing here with collector boxes in the last 2 years is WotC doing with Magic collector boxes what the Pokemon Company regularly does with Pokemon boxes and has done for the last decade and a half. And so we see that kind of amazing performance. Now, some of these that are kind of preposterously high, 66% for Ravnica Remastered, 57% for Modern Horizons 3, obviously 400% for Fallout. That's because compound annual growth rate calculations get kind of wonky on short time scales. And the reason for that is that maybe you have a product that has done really well right after release, but say it's only been released for 3 months. Well, what you're doing is you're drawing a line and you're saying, well, it's going to continue getting that kind of performance for the other 9 months of the first year. And because it's an annual growth rate, it's saying what would it be after an entire year of that same rate of growth. And so again, if you've had something that's been a very quick winner, it's going to extrapolate that out in a kind of unrealistic way. And that's why I don't have every expansion on this plot. I only go up to Assassin's Creed down here at the bottom, which was July of 2024. So really the last 6 months of expansions I don't have on here because their CAGR calculations will just be silly, whether silly to the upside or silly to the downside. But as the sets become older and older, the numbers hold more and more water, where even something back here like original Lord of the Rings boxes at an 84% CAGR, well, we can go over here. We can see that that's an 18-month-old box at this point. And we can start to say, yeah, we feel a little bit better that that is a really representative CAGR calculation. So we've seen this market move a lot in the last 6 months. We saw 4 of the 10 negatives turn positive over the last 6 months. I think we'll probably see, another 2 or 3. I think Murders will turn positive. Baldur's Gate will finally turn positive, and Adventures in the Forgotten Realms has a good shot of turning positive in the next 6 months before I update this again. In the long term, all of these are going to do okay. In the long term, Printed to Oblivion will be forgotten for these products, and they will become more and more scarce over time. That's just the reality of the TCG expansion lifecycle. That's what happens. But it's good to see it expressed with the objective, unarguable mathematics here that, hey, these are the actual numbers. This is what it really looks like. There's no drama here. There's only data in what you're seeing on the screen. And man, these last 2 years of collector boxes have been very exciting. I hope you've been buying along with me. I hope you've been taking advantage of the deals that I've offered. And I hope if you're a patron, you've decided to buy when I've given the great opportunities to get discounts there. I think WotC's going to keep executing. Right now, there's no reason to bet against it. And like I've said previously, WotC is going to have to start messing up, and they're going to have to consistently mess up for an extended period of time for our attitude to justifiably change, for us to go back to a negative attitude towards collector boxes and towards pre-purchasing them before they're released. So right now, I feel very confident pre-ordering collector boxes. I've done it for a couple of sets in a row, and I'm planning to keep doing it. So I do this update every 6 months. I do similar updates on Pokemon box performance. I had some wild comment left by somebody recently saying that he hates how Invest Bros always talk about what you should buy, but they never want to come back and talk about how it performed. And I thought that was a very weird thing to put as a comment on my channel because, well, I do the market walk on the 7th of every month where we do nothing but talk about prices for about an hour. I do these updates twice a year on various different subjects. And whenever I can, I like to just remind people of how great all of these assets do in the long term and how well all of the products that I've suggested over the last 4 years have done. I mean, just look at this chart. How many of them have come up? How many of them are beating other default investments you might make elsewhere in your life? And how much fun this hobby is because of it. Let me know what you think, guys. Thanks to everyone who makes this content possible, especially my very generous supporters on Patreon. Like, comment, share, and subscribe, and join me on Final Trade.